The short-term rental market, once a booming $100 billion industry, has dramatically transformed global tourism and fueled a national housing crisis. It's been a goldmine for early adopters, but the tide is turning. What began as a quirky alternative to traditional hotels has spiraled into a symbol of the problems plaguing modern real estate. Take Airbnb, for instance. This giant recently announced the permanent ban of parties at rental properties, marking the end of an era for many Airbnb hosts. Imagine investing your life savings into an Airbnb property, adhering to all the rules only to find the rules of the game changing overnight. But it's not just about party bans. There's a deeper crisis brewing. Reports are surfacing of hidden debts, tens, even hundreds of millions of dollars, possibly reaching $1 billion. This financial iceberg could have far-reaching impacts on the market. The origin of this market disruption? It dates back to when Brian Chesky and Joe Gebbia creatively rented out an air mattress in their living room during a fully booked conference, the birth of Airbed and Breakfast, now known simply as Airbnb. Today, Airbnb overshadows giants like Hilton and Wyndham, boasting a global presence unmatched by peers like Uber or DoorDash. Initially, the concept won hearts. Travelers got budget-friendly stays, hosts made extra cash, and communities diversified. But now the very foundations of this market are shaking. Customers, hosts, the public, and the platforms themselves face unique challenges, jeopardizing not just the short-term rental market, but the broader real estate sector. Let's start with the host, often seen as the fortunate ones in this scenario. Airbnb offered a novel way to profit from real estate. It was more lucrative than long-term rentals and came with added flexibility. Hosts could avoid the risks of a permanent roommate like personality clashes or rent issues and enjoy the convenience of managing bookings through an app. Initially, Airbnb's appeal was its ability to match adventurous travelers with spare rooms, but gradually it evolved into something much larger. Entire properties became exclusive short-term rentals, offering a more profitable alternative to traditional long-term tenancies. This shift in the short-term rental market from spare rooms to full properties didn't just alter the dynamics of hosting, it sparked a series of repercussions across the housing market and communities. What was a supplementary income for many turned into a full-fledged business model, contributing to a shortage in long-term rental options and escalating housing prices. It's a classic example of a small idea growing beyond its original scope and reshaping an entire industry. As we delve deeper into the Airbnb phenomenon, the picture becomes more complex. Initially, property owners were lured by the potential to double their income compared to long-term rentals, but this golden opportunity required more hands-on management and came with its own set of risks. The market's response was innovative, yet ultimately unsustainable. Airbnb barons emerged, designing properties specifically for short-term rentals, streamlining operations to the point where it seemed too good to be true. And it was. Market saturation and regulatory crackdowns soon followed, squeezing profits and raising questions about the viability of this model. But the real turning point came when Airbnb, once the affordable alternative to pricey hotels, began to lose its competitive edge. Prices crept up and traditional hotels adapted, encroaching on Airbnb's territory with apartment-style offerings. Simultaneously, other platforms began chipping away at Airbnb's dominance, offering similar services with lower fees. The public sentiment shifted as well. Communities are tired of the transient nature of short-term rentals and the strain they put on housing affordability. Legal battles and homeowners associations became new frontiers of resistance, signaling a broader backlash against the short-term rental model. As Airbnb grapples with these challenges, its future hangs in the balance. The platform's branding as a local experience provider seems more like a strategic defense against legal scrutiny than a reflection of its actual offerings. With increasing competition and regulatory pressures, Airbnb's journey serves as a cautionary tale of rapid growth, market disruption, and the quest for sustainable business practices. In our next segment, we'll explore what this means for the future of short-term rentals and the real estate market at large. Stay tuned as we unravel the implications of this seismic shift in the world of hospitality and housing. If you're getting value from this video, I would so appreciate you taking a moment to like it. The troubles don't end there. The very successful success of platforms like Airbnb has drawn scrutiny from governments and local authorities. With housing crises intensifying in many cities, regulations are tightening. The dream of easy income for property owners is now colliding with the harsh reality of legal complexities and community backlash. Moreover, the narrative of Airbnb and similar platforms as champions of the sharing economy is losing its sheen. Reports of hidden debts and financial instability within these companies raise serious questions about their long-term viability. Investors and hosts alike are now facing a future where the rules are unclear and the stability of their investments is in doubt. As we peel back the layers, we see a market grappling with its identity. On one side, there's the allure of profitable short-term rentals. On the other, the pressing need for affordable long-term housing solutions. The balance that once seemed achievable is now tilting, with significant implications for hosts, renters, and the broader community. In this evolving landscape, we're witnessing a paradigm shift. The short-term rental market is no longer just about providing a unique travel experience. It's at the center of a complex web of economic, social, and legal challenges. As the market recalibrates, the future of short-term rentals hangs in the balance with potential ripple effects across the global real estate market. As we peer into the future of short-term rentals, a landscape of uncertainty and transformation emerges. The once thriving sector, spearheaded by platforms like Airbnb, is at a crossroads. Multiple factors are converging to reshape its trajectory, with significant implications for the real estate market. Let's discuss the evolving landscape of short-term rentals. 1. Regulatory changes. Increased government regulation from tighter controls to potential bans impacting the market, nudging some investors towards long-term rentals or selling. Market dynamics. With short-term rentals becoming oversaturated in popular areas, hosts are adapting by diversifying into less crowded markets and creating unique stay experiences. 3. Tech innovations. Hosts are embracing technology like automated check-ins and AI pricing to streamline operations and enhance guest experiences. How will this impact on real estate market? 1. Investment strategies. Adapt. Investors are recalibrating, balancing between short-term rentals and long-term options, considering both rental income and property resale value. 2. Ripple effect on housing. The retreat from short-term rentals could ease housing shortages by increasing long-term rentals and homes for sale, though it may also cause market fluctuations. 3. Emerging real estate trends. New opportunities arise as the market evolves. Watch for innovative models like co-living spaces and hybrid rental properties tailored to modern consumer needs and market trends. The future of short-term rentals is not just about adapting to challenges, it's about reimagining the role these properties play in our communities and economies. As the line between traditional hotel accommodations and short-term rentals blurs, we'll likely see more hybrid models emerge, offering the best of both worlds. Moreover, the rise of remote work and digital nomadism presents a unique opportunity for the short-term rental market. Properties that cater to these modern lifestyles, offering flexible, work-friendly environments, could carve out a new niche. While the short-term rental market faces significant headwinds, it's far from a bust. Instead, we are witnessing an evolution, a recalibration of strategies in response to a changing world. The real estate market, ever dynamic, will adapt and innovate, presenting new possibilities for investors, hosts, and guests alike. Stay tuned for our next episode, where we'll dive into specific case studies of how cities and communities are adapting to these changes and what this means for you as a traveler, host, or investor. All right, that's a wrap on the roller coaster world of short-term rentals. If you enjoyed our journey from boom to, well, less boom, show us some love with a like. Hit subscribe to join our wild ride through the wealth-building universe. We promise it's more fun than a broken elevator in an Airbnb. Thanks for watching, and catch you on the flip side.